Hey, welcome to Ask Me Anything. We got the music started early today. We got the drinks flowing. We're here to answer your questions. We're going to have some fun. I'm going to change the branding, and we'll be back after this quick 14-second video to get this party started. It's hump day. All right, here we go, guys. You guys get the questions in the comment box over there. We're here to answer all your questions. I tuned down the background music a little bit so you can hear us a little bit better. We're having
That's good.
today. Coming straight from Orlando, Florida. Jelly Rogers. What's it called? Jelly Rolls? Jelly Rolls, Disney Springs, dueling pianos. We're keeping the party going. We had a great time at the experience. If you've never been to the Money Multiplier experience, you got to come. The next one is going to be in October out in Sundance, Utah at the Owl Bar. Whatever else we do, but we'll be at the Owl Bar having some fun. Maybe we'll talk into getting a piano for us there. We'll see what happens. But today we're here to answer your questions, so get the questions in, and we will get those started while we're waiting on the questions to flow in. Again, I'm Stephen Nagy down here in South Florida, rocking and rolling, having fun with all of our agents, the Money Multiplier, Private Money Club, lots of cool stuff going on, getting ready for next week. I was over there waxing my snowboard up. We're going to do some boarding next Thursday when we get out to Salt Lake City. And then, of course, we have Money Tank event going on all day Friday night, all day Saturday night. We're going to have over 100 people in person. We're going to have a couple hundred people online watching virtually. So you better be one of them. We're really going to miss out on a lot. We do have maybe a couple standing room only tickets left in person, and we do have virtual tickets. We have space on the Zoom for virtual tickets. So get your tickets now. Other than that, I'll pass it over to my man, Joe. What's up, Joe?
Hello. So we're still recuperating from the experience. If you didn't go, you missed a great time. Just like Steven said. And there's nothing better than to meet somebody in person that you've been talking to for 6-7 months or a year even. And it's awesome just to hang out with people and have a drink with them and just chit chat. It's awesome, and I can't wait to do it next week. We'll be out in Utah doing the PMC thing, so another 100 people to meet and greet. Let's do it again. And over to Regador.
And Joe, I have to say, I really enjoyed all the videos. And I think there's a request out there. They want to see you do the wiggle again. Dexter's asking for the wiggle. But Craig Ennie here from just south of Denver, Colorado, in a town called Castle Rock, and looking forward to the discussion today and answering your questions. So without further ado, on to Mr. Brian Fouts.
Hey everybody, Brian here up in the Pacific Northwest, enjoying some actually sunny weather for once. And actually getting ready for a great infinite banking mastermind call tomorrow with some of our clients. We're going to be talking about asset protection, which is going to be a phenomenal concept. And as always, you need asset protection before or after something crops up. Please do it before. Before. And never after. So we got some cool people coming to talk to our group about that. With that, Linus.
I'm here. Hey, it's Linus Nolt. I'm out here in Western Kentucky, Hopkinsville, Kentucky. Don't let me call it Little Chicago. Never mind. But yeah, we're just out here trying to stay out of the way of the tornadoes this time of year. And I'm over here with a big tall glass of homegrown, home-brewed herb tea. Down to Sean.
All right. I am like Joe and Steven and Chris recovering from this weekend. It was super awesome. We got to meet you in person, and I even went down like the water slide with some people. We went down water slides. We were dancing the night away. It was awesome. So it is hard to put into words like just how fun it is. I don't even know. It was so much fun. So hopefully you guys can come next time. And then I see Mr. Chris showed up last, but not least.
I was on the phone with the IRS. So
Oh no!
I just needed to get a EIN document, but nothing's fast in the IRS world.
What's everybody think? Shauna should quit her job and be a dolphin trainer. Take over what? What do you guys think?
That's awesome.
Oh yeah. Okay. So Steven, another thing that happened to me today is my whole computer crashed, and I have to like rebuild it right now. So it's real fun.
Let me find JoJo.
No.
Yeah, good luck with that.
All right.
Who's next?
I can't see the comments from here, so you gotta figure this
Oh.
out.
Oh my gosh.
I'm working from a phone until my computer gets fixed. Sorry.
I just realized this looks like Joe. Joe, you're not allowed in Florida anymore. It looks like he's trying to drown the dolphin here. Look at this. He's like, yeah!
I was hopping on him.
The way he's pointing, like, what's that guy doing?
I weighed more than he did.
Telling you, if you're not the experience once or twice a year, you're missing out.
I just had the best time. I had so much fun. We were dueling pianos for 5 hours.
Yeah, that was great. All right, Steven, you want to read some of the questions? I'm just going through marking them
Turn
right
that
now.
music down, please, for the love of God.
That is
Yeah,
pretty
I-
loud. Like, we got this new music thing, but that's just a bit much. I got it.
We go to something a little more chill, like daydreaming. Oh, dang. Ooh, feeding the ducks. Joe's got his duck thing going. I have to reenact that today. All right, let's get to some questions first, though.
Craig saw my duck thing, Chris.
All right. So first off, I must say, what's up, Dexter? Because
Dax.
I feel like we always say hi to everybody, and we always leave Dexter out. And I know he sends text messages to other people. He's like, these guys always leave me out. So Dexter, we love you. You know that. Actually, for the rest of today, just in honor of Dexter, for the rest of Ask Me Anything, I'm going to wear this badass hoodie that Dexter got me, just in honor of Dexter. So Dexter, thank you, man. We never forget about you. It's always right there. You're always in my thoughts. All right, here we go. Class has started. You're right. All right, let's go. Here we go. We got Tam. Tam says, all right, okay, we're getting to serious talk here now. All right. What are other tax advantages W-2 employees can have outside of an HSA, which is a health savings account, which is a qualified fund, a 401k, another retirement qualified fund, tax loss harvesting, which sounds fun. I'm kind of hungry. It makes me hungry. Donations and real estate investing.
Have kids.
Yeah, more kids.
That helps a lot. Trust me, I know.
Although we can't give tax advice, I mean, it's pretty simple. I mean, there are really no tax advantages to W-2 employees. That's the honest answer. There are tax advantages to small businesses or entities, LLCs, but to a W-2 employee just filing as a W-2 employee, I think you listed all the options that I could possibly think of. I would definitely say, but Steven, I would just tell them, open a business for a side hustle and run some business.
That's exactly what I was going to say. I mean, to me, the biggest one there is missing is like an LLC or a company, a small business. Yeah. To take deductions and actually use that legitimately, you do have to work it a little bit, but nobody says how many hours, what that looks like. So if you, and I know people hate on the network marketing industry and multi-level marketing and that kind of thing, but I'm 1,000,000,000% convinced that if you do not understand business, you never had a business, you don't understand sales, you don't understand any of this stuff, I 100,000,000% believe that a network marketing company could teach you a lot of basics and put you in a position to get that first company started and teach you the skills you need to be able to go out there and start doing things. And it's not about the network marketing company as much as it is you need to, first off, I believe in the product that you're buying and selling and representing for that company, but more importantly, have the right leadership above you that's helping you with all these different skills, provides trainings and things like that. And I know a handful of people in those industries, network marketing, that are unbelievable people. I would do business with them any day of the week. I'd be friends with them any day of the week. Now, there's 99% of people in the industry that are scumbags and I would never do business with. But you got to find the right people. Find your tribe. Just like infinite banking, just like life insurance, just like real estate investing. You find your people and you stick with them. And I like to think that's kind of what we've developed here with BYOB and Money School and the Money Multiplier. And so if you can find a company, myself, I mean, I'm still in a network marketing company to this day. I've probably been in a dozen of them over the years, but that's what 7K Metals is. So I get silver to my house every single month automatically, and I buy from them multiple times a month. And that's how I'm building my precious metals. It's all a network marketing company, and it just allows me to have another company that I'm able to do things with. So just a personal experience there.
Yeah.
What about that oil or gas something or other? Isn't there something tax deduction doing that thing?
So a lot of gas
You can do
exploration. Yeah, I mean, a lot of that's 100% tax deduction in year one in a lot of it, and then what you make,
Not anymore. It's 60% now until they pop back up to the 179, 100%. The 179 deduction on the equipment.
Yeah.
No, not in equipment, but in
But there's also intangible drilling costs that you can get if you get
drilling.
oil and gas. Yeah,
yeah, not equipment, but drilling.
I did
Right,
that
but
as a
it all falls into the 179 deduction realm. Am I wrong in saying that?
Does it? I don't think.
I don't know
I
for
could
sure
be
on
wrong.
that.
I could be wrong.
Yeah. I
Maybe
believe set up properly.
Yeah, when I was a W-2 employee, I had oil and gas investments, direct ownership into them. I gave it to the CPA, and he did the whole tax deductions, but it was a lot. Ended up being a bust, but I recouped about 90% of the money back from the taxes. So
That's the goal.
yep.
It's the most speculative thing you can invest in, and you have a higher chance of losing all your money than, well, losing the money, but you get the tax write-off than you do making. We had somebody on our wealth webinar that was really credible. Probably the best chance of you not losing money, it would be to contact them.
Yep. Just do your homework, though. That's a high
So
risk.
the only other thing I was going to throw out there for Tam is, and I don't know what type of work you're in, but I wonder if there might be an opportunity for you to go 1099. So if whatever service you're offering right now, is there a possibility you could be a consultant or go 1099, and then you have some more benefits of write-offs and different things?
Yep. When I was a W-2 employee, my wife was, I think she was too. She had a side hobby doing music. And so she wanted to get more into it. And so she was buying voice lessons. She was buying like some t-shirts and making t-shirts made. And so what we did is we actually reported that on, and this is not tax advice, but we put it in our tax return as a business, but she didn't have an entity or an LLC. And so some people don't know that you don't have to have an entity or LLC to report your business expenses on your tax return, your personal tax return. So we had about $10,000 of deductions, and we had some profit too that reported. And that was a tax write-off for her side business. And she did it for a couple of years, then we stopped doing it. But she never had to incur the expense of an LLC because it never got that big. But that's not advice or anything, just something I did with my wife.
And you're right, because all of my real estate, all of my private money lending up until 4 years ago, I never had an LLC. I just ran straight on my social security number and just did it that way.
Yep.
And still did the deductions, just like you said.
Yep.
All right, cool. And in between questions, we're going to pull up some fun stuff this week since we're in a fun mode coming out of the experience and headed to Money Tank next week. So if anybody's ever worked with Mike Samet or Kevin Shortell, this is Mike's wife, Lori. They were at the experience. Kevin Shortell, of course, is one of the top note investors in the country. So this was us heading to Jelly Rolls, to the dueling piano bar at the start of the night, which I just think is a beautiful photo. I don't actually want to share that one. So let me get to the next question here. Let's see. So where in the Pac Northwest, where are you located, Brian?
I am in central Washington State in the Yakima Valley, where 70% of the hops in North America come from. There you go.
All right. And Shauna's going to love this one. We're going to let Shauna say a good word right now, since men are not allowed to have the mic, apparently. Right,
Yes.
Chris?
Shoot.
Yeah, I think for
I
the
got it. What do you,
Shauna, whenever that happens, you just got to be like, oh, I'm not.
no. What do you call a fake noodle?
Fake noodle.
An impasta.
All right, maybe that guy wants
There
to
we go.
repost
That was
this
my
on
mic.
today.
My mic drop.
All right. Can you guys explain how Nelson Nash, he wrote that book, right, Joe? Finds a way to wash all his how he finds a way to wash all his income through the policies.
He doesn't.
He does.
We actually
That's the
talked
answer.
about this on our agent training earlier, a little bit with Terry Cook. But yeah, the answer is he doesn't. But you want to expand on that a little bit?
Yeah,
The
I
more
mean,
you make, the more you can run through.
he talks about it in the book. He certainly does, but he says it's a 10-year sprint to get it to that point. And things may have been slightly different with how they did the underwriting back when he wrote the book, which was late 90s, early 2000s. And I certainly can tell you today, you wouldn't be able to get 100% of your income because they cap it. So probably the only way to do that would be to use gross income from a business as that, so that you're not, that would be the income that the insurance company is looking at. And then your personal income, if you were going to flow it all through the policy, would be significantly less. So let's just say the limit for the insurance company is 40% of gross. Well, you would take the gross of the business, reduce it, down to 40%, and then you could run, if that 40% just happened or was designed and architected to be your personal income, that'd be the only creative way you'd be able to get that into there. It's just very hard to get 100% of your income in. Plus, I would never recommend somebody does that because, I know Nelson talked about it, but to get 100% of your income to run through the policy would mean you'd be paying for your groceries and everything else with the policy. And I don't condone that type of use of IBC. I personally don't. Now, I'm not saying I'm right, but I certainly teach it a certain way. And I just think that's a terrible, 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 terrible use of the funds that are in your system, your banking system, to pay for things like rent and groceries and diapers and going out to eat. I hate it.
Yeah.
And Stephen brought up a point. We just had this conversation on kind of an internal call, and it's really enlightening, listening to what Terry was saying. Terry's from Lafayette, and the insurance companies, if they allow you to put too much money into a policy based on your income, they're at risk, and they don't want to be in that position either, because if they agree to allow you to fund a policy beyond what you should, it puts them at some legal risk for you to come back and say, hey, you oversold me this product. And, so everyone's kind of trying to make the best of the both worlds, but I just don't see how you're going to get 100% of income into the policy because, one, the insurance companies find it too risky. They don't think it's sustainable. And so those are some of the risks.
Yep.
Cool. Another way to kind of look at the policy when it comes to expenses and using it for everyday stuff is almost treat it more like a break glass in case of emergency situation where hey, you can't, it's not the best way to use it, but if you ever needed to use it for that, great, like it's there for you. So just there's no rights or wrongs with any of this stuff. All right, Lucy, we love you and all of our clients. Not all of them, but most of them. Let's see. 1099 is always an option. Yeah. Okay. Let's see. Are there any plans to take the microphones away completely? All right. Shauna, another vote for Shauna. All right. Once I have a loan out on the IBC policy, does it make more sense to pay back my HELOC at 9.65 and then over to the policy or vice versa?
Do we still have a mortgage? Are we utilizing the HELOC just for investment? Where did the money come from that went into your IBC policy? Did it come out of the HELOC to begin with? I have to kind of know everything that's going on. Are we doing a one-pot system where all the money that comes into the house is coming into the HELOC, so therefore out of the HELOC into the IBC, into an investment, and then back into the HELOC? You always want to pay the HELOC first because of the opportunity cost, but it depends on where the money came from out of the IBC. So I need a little bit more info.
The way I read that, they say, would it make more sense to pay back the HELOC? It makes it sound like they took the HELOC loan to fund the IBC and then took the loan out, and now they have a loan.
So the IBC is always an asset from day one because the money that you're making in dividends and interest is more than the interest that you're paying. So therefore, the opportunity cost with the HELOC is always there. So to get that down would definitely be a benefit.
But I wonder too, what what did they do when they? So if they took the money out of the HELOC, put it in the policy, then what did they do with the money from the policy? So we need to iron that out too.
Well, it should come back into the HELOC and then be put into the investment. But I mean,
But maybe they bought a car. Maybe, so we just kind of need to know more details about what they did with that money from the policy.
need more of their J10.
Yeah. Second lien, HELOC, one pot system, the whole bit.
Yep. Do we have a mortgage?
What happens if you have a mortgage, Joe? Then how does that factor into it? Like, is it better or worse to have one or not?
If you have a mortgage and you're running a HELOC, I do not like to mix streams. So I just want you to carry on your normal life, utilize the HELOC, and put that into an investment and have the investment come back into the HELOC, because now you're just doing apples to apples. You're not encompassing anything, left over. You're just doing the regular, and you're utilizing and having the spread pay for the HELOC and making more money that way. That's how I started first with Chris. And then it was just going from the HELOC to Chris. He was paying for the opportunity cost. I was left with money in my hand. It wasn't costing me anything because he was paying the HELOC interest, and I had leftover in my hand because of the arbitrage. So then after we went through that step, then I took it from the HELOC into the policy and then lent it to him. So now I was making money twice.
And Joe, what is this one pot system you speak of?
Everything that comes into the house goes into the HELOC. The HELOC gets paid down. And then we pay, the HELOC is the savings account, the checking account, and the investment account. So now the HELOC pays for the electric bill, the cable bill, the credit cards, and at the end of the month, the amount of money that came into the house is much more than the amount of money that went out of the house. So therefore, the surplus paid down the principal.
And Joe, if I had 20,000 sitting in a savings account for emergency fund earning 0.01%, should I leave it there or what should I do with it?
So how many clients do I hear? I say, do you have a HELOC? Oh yeah, but I only have about, I only owe about $10,000. Oh, okay. What's the interest rate on that? Oh, about 8%. And do you have a savings account? Oh yeah, I have a savings account. How much money is in your savings account? Oh, about $10,000. And how much does that make you? Oh, less than 1% interest. So why do you have a savings account with $10,000 making you 1% and paying 8% on a HELOC? Why don't you take the money out of the savings account, put it in the HELOC, and now it just saved you what? 7%. Sounds like a good plan to me.
Nice.
A lot of our clients have the tools. They're just not using them efficiently.
That's the story of our lives for sure. All right, what we got?
All right. Can I put the money I make from work and constantly put it in and take it out? Make it work and take it out this month.
That's
kind of similar.
I got to redo that video. So, John, that's kind of what I was talking about earlier. It's the misconception of IBC's best practices and what you use IBC for versus just banks. So a traditional checking account is always going to be the best use for paying household bills like utility bills, groceries, going out to dinner, things like that. I mean, unless you're putting them on the credit card and then at the end of the month paying the credit card, that's a different discussion. But let's just assume the difference between loans like that you would take and use borrowed money versus just everyday expenses to live. Everyday expenses to live, take your income, put it into a checking account, and use the checking account to pay everyday expenses. The things you normally would finance, because remember, IBC is a process of taking back the banking functions in your life. So what that would mean is if you're financing cars, then use the policy to pay off your car and then write checks back to your policy for the car payment you were making. Instead of using and carrying balances on credit cards, use your policy to pay credit cards down to zero, take the payment you were making the credit card, put it back into the policy. And you just keep going. So things that you would finance, bigger purchases, things that you save money for that you are saving to buy. Those are the things that you use the policy for. You do not want to use the policy to pay household expenses. Just think about it. Like, you're putting money in the policy, it's earning interest uninterrupted, but then you're taking it out and it's going to something that it doesn't make you anything. Your money stops working when you pay for groceries. Like, the groceries aren't making your money work. So yes, the money in the policy is earning, but it's a debt issue on the other end. And that's just not a good practice. There are people out there that teach that. I know in Nelson's book, he says after, the 10th year or so, like, you could be doing that, but I just don't think that's an effective way anyone should use this system. That's just my personal and professional opinion.
Now, what about their car payment or their credit cards? So if they have a credit card payment that's $500 a month and a car loan that's $500 a month, do you think that paying themselves first through the policy before they pay that credit card or pay that car loan?
No, they should use the policy, save up money in the policy to then pay off the credit card, or save up money inside the policy and then take the money out of the policy to pay off the car loan. I don't think the policy should be used to just make monthly payments. Like, how is that meant? It just to me, it's all math. It's just all math to me. And like, I've cut out all the bullshit. It's just mathematics. And if the math doesn't pencil and doesn't work, then why would you do that?
Well, so Chris, I'm pretty sure I've heard Devin Burr talking about how he does a lot of his stuff on his credit cards, and then like for his household expenses. So I mean, I don't know what his method is.
Remember I said earlier, that's a different discussion.
Right, and I don't know what his method is, but so I mean, I do think some people do it, but I don't know that we know and are really going to give you the roadmap of how to do that. That's kind of more like discovery you might make on your own funky way how to do it.
If you were using a credit card to pay all your expenses and everything went on the credit card, and at the end of the month, you took the loan from the policy and you paid off the credit card, and you took the payment you would have made to the credit card, like, because your statement will always tell you what your minimum payment is, and you paid that back to your policy, game on. Like, that would be, I could see that, but I can tell you that's gonna come back and bite you in the ass, because if you did that every single month, what are you going to do? Every single month, make that minimum payment back? Because I mean, that's the only way I would know how to do it. Now, I'm sure Craig is already coming up with a spreadsheet to do all of that. But for right now, I think there's so many things you can use your policy for that are so valuable and so financially feasible that I just don't know why you'd be seeking things like that. Maybe just to make good discussion, just to tell everybody I use my private banking system to pay for everything in my life. That's a cool conversation, but are you getting wealthier from doing it that way is the question I would come back and ask. And I would, if you did it with the credit card and every month you made the minimum payment to the credit card, yeah, I suppose that would work, because you're effectively not just making the payment back to your policy, but you're also getting the interest you would have given the insurance or the credit card company. But I still just would say, why would you do that why wouldn't you just let the money build up in the policy and then find an opportunity like ROI Property Group or an opportunity like that life settlement deal, and then have your money out there working between 12 and 18%. Like, that to me is just a much easier way for my mind to articulate it.
Mm-hmm.
Using credit cards and paying credit cards every month. What did Brent call that? Playing financial gymnastics with the insurance company.
Yeah, and Chris, kind of what comes to my mind is you've got the 6 laws of wealth, and the first one being save 10% of your income. So what we're talking about in this process is if you're saving your 10% of income, where are you putting it? Well, we have a better place to put it. So now you're putting your savings into your own banking system and letting it grow, compound for the rest of your life. And then, just like what Chris was saying, can you do something with that money that's going to be more beneficial than just buying groceries? What if you put it into a private money club deal, 12%, and that bought your groceries, and then you took some of it and stuck it back in the policy? So
I love that. Let Brian pay for your family's groceries, right? Brian probably borrows some money, like lend money to Brian at 15%, and then Brian cuts you a check, and then that's your wife's allowance or your husband's allowance to go buy beer or groceries. Like, that's fun, man. Then you go to your friends, you'd be like, hey, you see this asshole over here? He's paying for the beer. Like, that's a cool concept.
Thank you.
Yeah, Joe, do you need a cool million, man? I gotta fill my liquor closet up again.
Yeah, right. Let's do it.
All right. Edward said, is there a way to be a lender to someone for their house to be better for the borrower, like Velocity Banking or BYOB, but still make a good return? Basically an alternative to a mortgage.
Isn't that kind of Kevin Shortell, sort of like buying the mortgage?
Well, I mean, it's private money club, but not for a consumer, not for like a individual.
Yeah, that's the only thing that throws me off on that, for their house. If it just said for a house or for a rental or for an Airbnb, I'd be like, come on.
I've lent on people's properties before, but there's one rule that I've learned. It's my rule. Not saying you should do this, but I don't lend on a home. I'll lend on a property, but not someone's home, because home is an emotional thing versus an investment property. A property is purely transactional. I learned that the hard way.
Yeah, it depends what you're trying to do. I mean, we actually hold the notes for a few people that were renters for many years and did great, and now they wanted to buy, they weren't able to, so we decided to sell our finance to them, created the notes, and now we're the bank on those properties. But they're great people, and can things go wrong with that? Absolutely, Brian. I mean, that's, everybody has different investment parameters and strategies and the way they look at it. So there's no right or wrong there. I mean, Edward, you just want to be careful, like if you're lending, like you're saying, Brian, like to someone you're close with or something that like, like if it's really their home, like, that can definitely get ugly. But at the end of the day, you can do private money lending. You can do notes. There's lots of ways to lend on real estate, legally, and have your money compounding in the policy while making great returns. I mean, in private money club, the most common I see on private money club is probably like 12 to 16% right now. So it's great returns, secured by a piece of property worth a lot more. So I love the way you're thinking, Edward. So if you haven't been on private money club or money club Mondays or anything, that definitely hop on. We do the PMC quick start webinar tomorrow at 1 p.m. I'll put the link in a second. Hop on that. You'll learn a lot on there for sure.
Now, one caveat to what I said, though, is I'm more than happy to lend as the mortgage company. So I've done a lot of notes and subject to investing where I become the mortgage. That I'm okay with, because I'm using an existing mortgage to get in the middle of a deal. I'm lending to people that I don't personally know, by the way. That was very lucrative, but I was in the mortgage position. So, yeah, a lot of ins and outs.
And the thing is, we talk about all the time, do what the banks are doing, and the banks lend money for people's houses. And if you think about the way they structure those loans, especially on a brand new one, let's just say you've got a 4% mortgage and your payment, I'm just going to throw numbers out there for making it up, but let's say your payment is $1,000. Well, if Brian's holding my mortgage, I'm going to be paying Brian $1,000 a month, but $800 of that's interest going right into Brian's pocket.
Yep.
That's why the banks love lending on mortgages, because the volume of interest is huge. So I think it's a great idea to hold notes if you buy them correctly, because you do have a really high volume of interest, especially on a new loan.
Yep. Lots of ways to make it work.
All right. So Jay just continued a little bit what he was talking about before. He said, do I use the money I would normally save for the following year's premium and deposit it into my HELOC, and then use HELOC for annual deposit? And then he said, using VB with my second lien HELOC to pay down debt, yes, mortgage, and still have some additional debt to pay.
Yeah. So like he said the first time, run it through the HELOC and then pay off the debt and recapture that back to himself through the policy. Yep. And then use the Velocity Banking through the HELOC, do other debts, and then, well, hopefully put that HELOC to work too. Get extra income coming in.
All right. This is Chris's favorite question. Is Puerto Rico in business to do BYOB, and how's it going to work with local checking account?
Yeah, we can write in Puerto Rico. There's only certain carriers we can use, but
Like,
I'm the only
please.
licensed idiot that writes in Puerto Rico. The license is expensive there, but yeah.
You got to kill that dinghy, man. You got to turn that off.
Dude, I don't know how, man.
It's so loud.
This is how my phone is all day long.
I've gotten to the point where not only do I have sound off, I have alerts off. I don't even get alerts for text anymore.
But it's just the laptop that's dinging. My phone is on silent.
He really doesn't know how to make it. He really doesn't know.
I don't know how to make my computer stop.
Oh,
You know
dinging.
what? And neither do I. So don't feel bad.
Dude, this just look good. I'm glad all of you get to share in the pain because I deal with that nonsense all day long, and it's enough to some days just make me want to jump out of a 2-story building.
Well, Chris,
Just wanna
before you
take
do
it the
that,
road against the wall.
either call Drew or call me. We'll help you out.
All right, let's see. Next question. Let's see. Nagaraja, thank you very much. We appreciate it. Sam said, hey guys, once on board, is the mentor assigned to me randomly or do I have an opportunity to choose? Who would you like to choose? Sam, it's really up to you. I mean, if you go through the mentor link, it's going to be randomly assigned whoever is available in the time you pick. But if you would like to work with a specific agent, you absolutely can do that. Just let us know and we'll make the connection. Cool.
So he's already working with an agent. He's already going through underwriting. I'm not sure if he's approved, but anyway, so he may be referring to the implementation specialist, and yeah, those do get assigned randomly, but they all do a great job, so I wouldn't be too concerned about that.
Yeah, and if you need anything, just let us know. I mean, we're happy to switch things up if needed. All right, let's see. Navigate Your Ventures said, by the way, this Money Club Monday was unbelievable. Found something my mom can do, not only me. Thank you, Stephen, for setting up the panel that day. Very welcome. Navigate Your Ventures. Thank you for being on. We've been having some really cool stuff on Money Club Mondays lately, actually. I've been doing so since we transferred most of the education and training to Thursday's call, I've been able to really load up Money Clubs with 2, 3, 4 opportunities each week, and it's been a lot of fun. So I appreciate you coming on Navigate Your Ventures. I love that name too. All right, Drew said, so apparently LLC has a $50,000 a month limit for loans that are distributed via ACH. Do you know why they limit it to $50,000 a month in loans?
So there's only a special form that has to be. Go ahead.
Well, I was say I would guess because of fraud, but I don't know.
No, they do more than that from what I've been seeing. There's just a special form you'll need to fill out. Just get in touch with your implementation specialist.
I think he might be referring more to when you log into the portal. The largest loan you can take is $50,000. If you want to take more, you have to call in. So I've never asked to see if you can actually increase that, but that's the default.
Yeah, I think just actual paperwork is involved probably for the bigger ones, I think, right?
Does that not mean on Monday you can take 50, on Tuesday take 50, on Wednesday take 50?
You could, but you could just call them up and say, give me 150.
Oh. I mean, if there's paperwork involved.
Yeah. Well, we have a guy on our team now.
know.
We'll probably answer that question so we can find out.
Who's that?
Terry.
Okay, yeah.
All right.
Oh, Drew's saying it's $50K a month per loan.
Oh.
Oh, per month, not per loan. Is that on the portal, Drew, or did you actually call in?
All right, while he's doing that, I'm going to read this. Stacy said, my hubs just did the medical portion of his policy last week. Hands down to Joe for constantly answering all my questions. And I had a lot of them. So
she's awesome. She was awesome. He kind of brought her into it, and she was kind of the devil's advocate. But we had a lot of conversations and a lot of question and answers, and it was awesome. So, hi, Stace.
Very cool, man. Very cool. All right, let's see. Establishing a private foundation versus charitable remainder trust, which is better to minimize taxes? Anybody want to take a stab at that?
Call your favorite CPA. I don't know.
We're going to defer that to a lawyer.
I'm gonna have to defer. I don't know what a charitable remainder trust is. I know what my private foundation is, but I don't know what the other one is.
Yeah. I don't know. Peter, reach out to me and connect with someone.
I might have figured it out.
Okay, good.
It's driving me nuts.
I thought you were talking about the charitable remainder trust. I was like, cool.
No, I got so excited. I'm stopping this dinging because it's going to ding me to death. Can someone text me so I can see if it worked?
All right, everybody text Chris.
Ding, 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 ding. I didn't mean to make this about the
I
dinging,
just
but
texted him. We might have done it.
all right.
Yeah, it's like the fire alarm chirp. And why, seriously, do fire alarms always chirp at 3 a.m?
I typed ding, so maybe that's why it dinged.
Did you?
Yeah, I did.
I'll send you the direction in a second, Chris. Oh, man. Derek said he got stuck with Chris Noggle as his mentor.
Worst one of them all.
Yes, always lend to businesses, never individuals, Andy. You want to stay away from like Dog Frank laws and all that stuff. Let's see. All right, we have people telling you how to do it. All right. So Drew said he did it through the portal and then got an email saying it was over the limit.
Yeah, so
I
that's
would
something
try
I've seen the implementation specialist talking about, and it sounds like when it's over 50,000, it's just a one-page form to fill out, a special form to fill out, and just submit it. So I guess it has to be a paper loan request. Now, Craig said calling in maybe do the same thing.
Cool. Let's see. Would it be better to HELOC on a mortgage or cash out refi? I have a house bought at $112,000 and recently got appraised at $156,000. No policy yet. I guess
They're swearing at us, Craig.
Well, there's one more option, I suppose.
And what would that be?
Well, they're talking about doing a HELOC on a mortgage. That would be the second lien position HELOC, or a cash out refinance. Or you could look at doing what's called a first lien HELOC, which is what Joe and I have and works really, really well. And everything goes, as Joe has already explained, everything goes into that first lien HELOC and then it goes out. Pay your bills, your policy loans, policy premiums. So if you want to look into that, that's where I would go. I mean, I don't know your specific situation, but the first lien HELOC, the nice thing about it is a lot of people talk about prepaying their mortgage. And anytime you prepay a mortgage, say you put $5,000 into your mortgage and then 2 months later you want it back, what's the likelihood you're going to be able to call the bank up and say, hey, you know that $5,000 I overpaid you? Can I have that back?
Zero.
Now you could go get a cash out refinance. You could, do all these different things which are heavy lifts to get the money out. But when you have a first lien HELOC, the money's kind of flowing in and out all the time. There's no questions asked. So that's where I would.
But a big thing too is if you do a cash out refinance, what happens the next month? Don't you take the money and put it right back into the 2x4s again? You don't have access to it.
Yeah.
So why wouldn't you sell your house, quote unquote, to yourself with an all-in-one HELOC? Utilize 90% of the dwelling, if you can qualify for that, and now the money never goes back into the 2x4s. You have it to utilize as long as you stay in your house.
Yeah, and Rob Joseph put a comment that the refi also restarts the interest schedule. So I mean that's another thing that we're not real crazy about. Whereas on a first lien HELOC, you're talking simple interest, versus on a mortgage, you've got an amortized mortgage with a lot of interest being paid initially in the first 7 years. So
cool.
I would never do a refi.
Chris, did you fix it? Or you want me to show you real quick?
I think I got it. I mean, it's not dinging.
Okay, perfect. We won. was going to show you real quick and share my screen.
Sorry, I got really sidetracked with that because you're right. No, it's not because I just got a text. We're good.
Okay, cool. You're good.
We're good.
Congratulations.
I was about ready to be done with Mac.
All right, Mike said, yeah, but when you keep going out of your phone to text, you should just be doing it from your computer. It's so much easier, man. You know?
Trying to pay attention to these questions.
You'll love Mac once we get rolling here. All right, just wanted to share. I've been working with an advisor here in Canada and going for policies 2, 3, and 4. This concept is life-changing.
Nice. Who do you work with in Canada? Is it Jason Lowe?
I don't know. I'm actually meeting with Jason in a couple of weeks, though.
He's awesome.
All right, let's see. Refi, restarts.
Let him know we
refi,
have any money.
restarts. Yeah, lines of credit, not loans. That's lines over loans. Depending on which way you look at that, I agree.
Correct.
Is the interest paid on the HELOC a tax write-off the same as mortgage interest?
Consult your accountant.
And I can tell you, I just was working on my taxes the other day, and in my first lien HELOC, when I was filing the interest on the tax, it asked if all of the money was used for the home. And so if some of it was for investing, I don't believe you can do the write-off on that. But
Contact your accountant.
yeah, talk to your CPA, but that was my personal experience with it.
Cool. All right, just a little fun fact coming up. Share my screen. For in honor of the best football team in America, Pittsburgh Steelers. Just wanted to quickly share what the logo means. So what do the diamonds on the Steelers logo stand for? In 1962, the Steelers petitioned the American Iron and Steel Institute, otherwise known as the AISI, to use their logo. The 3 diamonds in the logo represent the 3 materials used to make steel: yellow for coal, red for iron, and blue for steel scrap.
Was that a question? Did someone ask for that?
Nope. Just because I'm
Just
in charge.
some useless knowledge that we need to know.
Uncle B-Rod wants to know what's for dinner and how all the forklift flippers are doing.
Or cliffs.
Flipping.
Well, good, man.
I got to get a new one. Oh,
Oh,
Ascendant
Whoa,
Financial. That is Jason. That is Jason Lowe, right?
Shauna is shooting laser beams now?
it
That
was
was
because I
awesome.
did this from my phone.
Crossing the streams.
Ah!
Why
Now we
did
look
it
like
wonder?
Chris. Chris has it without having to do anything.
Hold on. Wait, wait.
mine's
Joe,
broken.
Joe,
Of course
Greg,
it
you
is.
have to
Why
turn
wouldn't it?
it on in the settings.
Oh, I got
Hi! Right back to jelly rolls, baby.
Oh my God.
All right, guys. This has been a lot of fun. I think we got to the end of the questions. So any last comments from anybody on the team?
No,
Well,
just
Mike
love it.
said
Love it here.
Cool. All right. Well, hope everyone has a great rest of their days. Let's see. What do we got going on this week, Chris? Tomorrow night, Thursday night, 6 to 8 p.m. Eastern, we got the Private Money Club 2-hour monthly mastermind, which is always a really good meet. It's a Zoom meeting where everybody has their cameras, if you want to. Your camera's on and your microphone's on, and we do like a mastermind. It's really good. And tomorrow, we actually decided, since Money Tank is next week out in Salt Lake, we decided to invite all of not only the premier members in Private Money Club, but everybody that's coming to Money Tank. So we're gonna have like a fun Money Tank preview, like who's gonna be there, who's who, what to expect, what's going on. Some of the speakers will be on, kind of like giving some little teasers for what they'll be teaching, some of the different opportunities and deals that are gonna be there. So it's gonna be a lot of fun. So join us tomorrow if you're a premier member or if you're attending Money Tank. And if you have not got a ticket yet, we do have a couple tickets left for in person, and then probably standing room. I think VIP sold out, a couple standing room only tickets for general admission. And then we do also have some openings on the Zoom for the virtual event. So you can join us virtually. Either way, if you buy today, buy tomorrow, you can join us for tomorrow night's 2-hour mastermind. So that should be really cool. And then we'll see everybody else next week out in Salt Lake City, Utah. So Mr. I'll see you then. Linus, thanks for coming on today. Brian, thanks for coming on today. Craig, we'll see you soon. Shauna, I'll see you next week. Chris, see you tomorrow. and everybody else. We'll see you guys right back here. Ask Me Anything, same place, same time, same crazy group of people having fun. Till then, BYOB, baby, for life. The real Slim Snake out.